And wake up money. If you think buying a home is expensive now, if banking regulators get their way, it's going to cost you more down to get the keys to that front door. Chris Schilling with Turbo Realty is here this morning. And Chris, what changes are happening in the mortgage market? What do people need to be aware of with this?
Well, some of the things that are in the pipeline is they're talking about increasing the minimum down payment for a home to 20%. And if they do that, it's going to eliminate a lot of opportunities for our buyers out there to find homes because they just don't have that much cash.
And why the change?
Well, what we did was that, back in the 90s, it was a lot looser, so the regulations didn't have the same impact that they do today, and so the pendulum was pretty loose. Literally, someone could buy a home as long as they had good credit. They could basically tell the lenders whatever it is that they thought that they made for an income. They could be a school teacher and tell them that they made $200,000 in order to qualify for the loan. There was no verification of employment. There was no verification of these assets. And so they went just on credit score. And so what's happened is that with all the mess, this pendulum has swung to the other side where they're making it much more complicated. They're really making these buyers jump through lots of hoops in order to make sure that they're qualified.
And I'm sure that realtors are probably pulling their hair out because it's going to slow down the housing market even more, isn't it?
It has that potential, and so those are real problems that we're facing for the future. So we're really encouraging buyers, if they're thinking about buying, if they're on the fence, you can get an FHA loan with 3.5% down. You can get a VA loan if you're a veteran with 0 down. So there are some options for you out there to go buy a home today, but it may cost you more later.
How much sooner will we see that go into effect? Any idea?
They're talking about later this year. There's really nothing definitive, but so you do have an opportunity right now to go out there and kind of look and see what's available.
And break this down for us. Let's give everyone an example here if they don't have their calculators handy. So if you buy a home worth $150,000 under the new proposed rule, how much down would you put?
Right, so $150,000, 20%, you're talking about $30,000. I mean, it's real money. And so that doesn't include your closing costs. And so the closing costs, your loan origination fee, taxes, your prorated taxes, your insurance. And so you add on another 3% to that. So you're talking about an additional $4,500. So $4,500 plus 30. So it starts to be a lot of money.
Yeah, that is a whole lot. And then what has to happen before the new regulations get approved? Can people still weigh in on this?
Yes. I
Okay.
mean, the best thing to do is, call your congressman, call your senator, and talk about these things. The realtor lobby has been very active in talking to those folks about it, that it's going to really impede the recovery that we're talking about. There's never been a recovery that hasn't been led by homes and home purchases in the history of this country. And so it's an integral part to, what we're going to be doing as a country. So I think that people ought to really weigh in.
Wouldn't some people say, though, that this is a good thing because we've had so many people buy these homes that they can't afford?
Yes, and I understand that the pendulum's going to swing to the other side, but there's a point of making it so restrictive that it makes it very problematic for folks to buy homes. We were probably too loose before, but making it impossible for people to buy homes is probably not the best solution either. I think they just need to be more diligent in looking at the people, looking at the homes, and so that's what they're doing is a lot of the properties that the lenders are looking at, they're having minimum requirements that the homes are going to have to meet in order for the lender to loan the money on them, and so they're looking a little harder not only at the buyer but also at the property in order to make sure that this is going to be a good thing for the bank.
All right, Chris Schilling, Turbo Realty. Thanks, Chris.